Hello everyone, let's welcome you back to this challenge from 1K to 100K into crypto active trading account. How we are doing? So for 2 days, actually we are up around $200 in our portfolio, which means that basically we are 20% up. You can count it, that's a lot for the 2 days. Definitely that's really good performance. So let's quickly begin this day with the trade we are currently on. Actually, it's XRP trade, which was going very well from here. Basically, there is with the larger volume we have opened here, and then we saw that it's exploding. Then the first sales point was there, the second was there, and then basically here it was actually all position was closed, but it was continuing to run. Therefore, I started to monitor it quite closely into the 5-minute chart, even into the 1-minute chart, and found some nice entries here in this little drawdown to the level of 0.68 and 0.69 region. Therefore, because actually it's not that much of the run anyways, it's good to see this first impulse, because those coins can double up in the price pretty quickly into the 1 week or 2 weeks time or something like that. Therefore we actually monitored it closely already when it starts to jump, and that's good to see that the coin is starting to jump. And also very important to notice is that we are currently open 12 trades into the longs. We are not going short on any of those trades. We have still plenty of money left free of the trades in the case there is the drawdown or the movement to the downside. Then we actually can easily put in the limit orders and open the better trades with the better entry points and quickly get back those losses into the longs. Let's try to see the good internet connection. So we are going back into this formation. And then I would like to, for today's topic, I would like to pay attention a lot more about those trades which are actually not going well. If they are like you are opening the long position, but the market is really not going long, it's going down, it's going even more down, and then even more down, and how to actually manage those trades in this bull market phase. I would say that actually this situation with the bull market this year and all this bias that we should go long, and also we have today this Bitcoin breakout out of 70K. This is important to take into account, and also taking into account the next months we have this Bitcoin halving, which is also after the halving. Typically in next months after the halving, Bitcoin doubles into the price. I do not expect that to be so quickly this time, because we already have an all-time high before the halving, which is first time in the history. So I would like to say that we shouldn't be that bullish and that into that much FOMO, but I would say that there should be some jump anyways upwards even more. And also on the Monday to Friday, we still see ETF inflows 10 times quicker than actually Bitcoin is produced, which means that this supply is 10 times shorter than actually demand. And until it continues so, then should see at least bullish momentum into the charts, at least from the Monday to Friday. With that being said, also it's good to take into account that Saturdays, Sundays can be the tricky period when it's easier to dump the market, and that we saw also in this weekend too. Basically already on the late Friday we saw movements on the downward direction. What else we actually want to mention here is that regards the trades and those drawdowns when actually the market is not in your favor and not in your luck and it's going on the opposite direction, the way to actually avoid the losses is that you, on each of the trade, you do not risk more than few percent of your portfolio. So even in the case we see that the market is going wrong direction, you can build up more position on this asset, because in this bull run we will most likely see a lot of coins running strong, but you never know on which time which coin will explode. It's like this XRP trade currently, when we see that it exploded we were on it before it exploded. And that's why, because we already have 12 positions open. That is all about probability into the market. If you are only one trade or two trades open, then you most likely will miss out of those great opportunities on the daily basis. So with the drop downs, when it's going down, so basically each 5-10% down, you just build up the more position, double your investment into this asset, and then also this average entry point will be lower. Basically, dollar cost average also into the leveraged positions, but your risk for that certain asset should not be more than 5% of your portfolio. That's absolute maximum. Normally 2-3% of your portfolio. I just apologize about this internet connection currently with the bybit. Looks like there is large volume into the bybit, so I would then end up here, seeing that we are already 20% up from the 2 days before. Also, our spot account is up around 10% in the last week, so it's a good way we are going. And also we will notice you with the next actions into the market very soon too. Thank you very much and see you next time.